So, if you've spent literally any time on financial TikTok or YouTube lately, you've absolutely seen the pitches, right? The flashy rented cars, the massive glowing profit screenshots, the loud promise that with just a little bit of hustle and maybe waking up at 4 a.m., you too can achieve complete financial freedom directly from your laptop. Honestly, it looks like the ultimate modern dream. But when we actually peel back the layers and look at the cold, hard math driving this whole thing, a very, very different reality emerges. So in this explainer, we're going to look at the numbers together and figure out what is really going on behind this glittering facade. Okay, let's dive into this with a really straightforward question. If I told you right now that there was a business model out there where 93% of the customers completely lose their money, the house makes guaranteed cash literally no matter what happens, and yet people just keep coming back, utterly convinced that this time it's going to be different, well, you would immediately assume I'm talking about a casino, right? And honestly, framing it as a casino would actually be incredibly generous. Because as we're about to see, the industry we are looking at today operates on an entirely different level of psychological manipulation. Think about it like this. An honest casino gives you bad odds, sure, but it has completely transparent rules. When you walk in and sit down at the roulette table, you know the house edge is baked in. You know the odds are stacked against you. And absolutely no one is pretending that playing roulette is a viable long-term career path. But prop trading? Oh man, it offers even worse odds, but completely disguises its predatory nature behind this guise of being a legitimate career. They sell it as financial empowerment and personal discipline. It's literally a system hiding in plain sight, completely normalized and widely accepted as a real job. So let's establish exactly what we mean when we talk about retail prop trading, because we are definitely not talking about the glamorous Hollywood version of finance. I'm not talking about some elite hoodie-wearing savant at a hedge fund turning institutional capital into millions while whispering secrets into a Bloomberg terminal. That is at best a 1 in a million scenario. No. Retail prop trading is a system marketed directly to everyday people like us. It is built entirely around paid trading challenges, arbitrary profit targets, and these incredibly strict drawdown limits. It's the version of trading where Discord servers are just full of people posting screenshots of a few green days right before their accounts mysteriously disappear forever. And make no mistake, this is not just some tiny niche corner of the internet anymore. We are looking at a massive, massive phenomenon. In just a matter of about 5 years, retail prop trading has exploded into a staggering $12 billion industry. $12 billion. And a huge chunk of this explosive growth is being fueled directly by TikTok, finance influencers, and this whole demographic of Gen Z and millennials who have totally bought into the promise of democratized finance. The sheer scale of this operation is genuinely mind-blowing when you take a step back and consider what they are actually selling you. Now, what's really interesting about this slide is the brutal reality of the data. Despite the endless social media hype and that constant narrative that literally anyone can succeed if they just work hard enough, an overwhelming 93% of people who attempt these prop trading challenges fail entirely. 93%. I mean, they pay their upfront fees, they take the challenge, and they walk away with absolutely nothing. The entire illusion of this massive industry actually rests on the shoulders of that tiny, tiny 7% sliver of traders who somehow manage to pass the challenges and get funded. But wait, because it gets even more shocking. Let's play devil's advocate. Let's say you are incredibly disciplined, you are super consistent, you have an actual mathematical edge in the market, and you somehow beat those overwhelming odds to become one of the elite 7% who actually succeed. What is your grand reward for all that effort? For those successful few, their average return is just 4%. Yeah, let that sink in for a second. You survive an absolute gauntlet where 93% of people are completely wiped out, and your average return is a measly 4%. Let's really contextualize just how absurd that 4% return is. If you are a successful prop trader, you're earning that 4% while enduring heart-pounding extreme stress. You're paying mind-boggling fees, and you're taking on massive risk. Meanwhile, just putting your money in the S&P 500 historically returns a lot more than 4%, with far lower stress and moderate risk. But here is the truly fascinating comparison. You could earn roughly the exact same 4% yield doing absolutely nothing, taking essentially zero risk, and just sitting on U.S. Treasuries. I mean, the winners of the prop trading world are putting their capital and their mental health on the line to essentially match the risk-free benchmark of the United States government. It's wild. Which, naturally, brings us to the most logical question we can possibly ask. If the odds of success are really this terrible, a 93% failure rate, and the rare successful returns only manage to match a completely risk-free benchmark,
Why on earth would anyone do this? How does this become a $12 billion industry? Well, the answer doesn't actually lie in financial logic at all. It lies entirely in marketing.
The answer is the social media mirage. I mean, if you scroll through the finance side of social media for even 5 minutes, you are going to see the exact same stories on repeat. There's the rented Lamborghini, the broccoli-haired teenager flaunting stacks of literal cash, and of course, that highly cropped profit and loss screenshot with absolutely zero context. These influencers are selling a pipe dream. They actively convince their followers that anyone can be rich, that this lavish lifestyle is just one pass challenge away. And most nefariously, they push the toxic narrative that if you fail, it just means you lack discipline or you didn't work hard enough. It's a perfectly crafted illusion of easy money. Let's move to and see how this builds when we look at the actual mechanics of the industry, because this right here is where the house generates its revenue. The business model works in 4 highly calculated steps. Step 1. You, the trader, pay an upfront, non-refundable fee just to attempt the challenge. Step 2. They give you what looks like a $50K or $100K account, but actually, scratch that. It's not even real capital. It is a simulated paper trading account. Step 3. The trader inevitably hits one of the incredibly strict, totally microscopic drawdown limits. And Step 4. The firm simply keeps your original fee, resets the paper account back to 0, and just waits for you to pay and try all over again. And here is the grand illusion totally exposed. This is the detail that never ever gets mentioned in those flashy TikToks. When that 7% of successful traders actually request a payout, where exactly does that money come from? It does not come from real market profits. Remember, they are trading on simulated paper accounts. The payouts to the rare winners come directly out of the massive pool of upfront fees collected from the 93% of traders who just failed. The whole thing is entirely funded by the massive pool of losers. The entire foundation of this $12 billion machine relies heavily on a mathematical concept known as gambler's ruin. Now, gambler's ruin isn't just a theory, it is a statistical certainty. It basically states that in any game of chance where a player has finite capital and a non-positive expected value, they will inevitably hit a string of bad luck and go completely bankrupt. The incredibly high failure rate in prop trading, it isn't because the traders are inherently stupid or reckless, not at all. It is literally an inescapable statistical inevitability built directly into the structure of the challenges themselves. Just think about it like a roulette wheel. If you go to a casino and you only bet on black, you have a little over a 47% chance to win on any given spin. That's because of those pesky green zero pockets. Now, you might get lucky, right? You might hit a winning streak and you might start feeling like an absolute genius. But every single spin has a negative expected value. Because you only have a 47% chance to win, that means you have a 53% chance to lose. And the math? The math simply does not care about your confidence or your super secret trading system. When we take that exact casino math and apply it right back to prop trading, the whole picture becomes terrifyingly clear. The prop firms apply these incredibly strict drawdown limits. They cap your upside, and they force a complete reset to 0 condition if you cross this invisible microscopic line. Because your expected value is negative to begin with, time is literally the only thing the firm needs. Time and those strict limits ensure that the math always works against you. They don't need to cheat you. They don't even need to rig the market. They just need to wait. Eventually, the math dictates you are going to hit a bad streak and fail the challenge. Now, you might be wondering, wait, don't the firms hate the 7% who actually succeed and extract money? No way, not at all. From the firm's perspective, this is purely a volume business. If 300,000 people take a challenge and the vast majority fail, the firm is more than happy to pay out the tiny fraction that succeeds. In fact, they absolutely love the winners. The few who win are not a threat to the business model, they are the marketing material. They are the literal proof of life required to keep the illusion going, constantly paraded out to the public to convince the next massive wave of paying challengers that the dream is totally real. So the crucial point is, it all boils down to one powerful realization. In prop trading, you aren't the customer, you are the input. Once you view the whole industry through this lens, everything just clicks into place, doesn't it? It's not a story about bad traders making silly mistakes. It's a brilliantly designed, cold-blooded system that only functions if the vast majority of people lose. Your attempts fund their system. Your inevitable retries keep their lights on. And your extremely rare wins? Well, they're just weaponized to market to the next wave of hopefuls. You are simply the fuel for a $12 billion fee-farming machine. As we wrap up this explainer, I really want you to walk away with a crystal clear understanding of the math that is hiding right behind the marketing. These businesses are expertly, mathematically designed to profit off of financial ruin, all while dressed up as the ultimate opportunity. Protect your capital, protect your mental health, and please remember the reality of the numbers we've gone through today. Because when the entire system is statistically designed for you to fail, sometimes the absolute best trade you can make is not trading at all. But, if an industry this massive can hide its casino math in plain sight right on your social media feed, it really makes you wonder, what other guaranteed opportunities out there are secretly betting against you? Keep learning, stay vigilant, and I'll catch you in the next explainer.